Welcome to another episode of Business by the Numbers. I'm your host, Demerist, CPA with Paar, Melis Associates. So it's been a while, but we need to talk about the employee retention tax credit because there have been a lot of changes and I've yet to do an episode because honestly, I was sick of talking about it for a while. But are you going to receive the rest of your money? Are you going to get audited? And what should you do if you get audited is exactly what we're going to talk about this week. Shop owners, are you struggling to find and retain top-tier talent for your automotive shop? Introducing Promotive, on the web at gopromotive.com. With over 40 years of combined industry and recruiting experience, we're the ultimate staffing solution. We go beyond traditional agencies. Our team provides dedicated recruiters and account managers advising on processes, compensation, and benefits. We focus on placing technicians and service advisors with shops that offer the best culture, training, and long-term growth opportunities. Trust our experience to match the right talent to your shop. We carefully select shops that value employee excellence and provide an environment for success. Our dedicated team leads the entire process, leveraging our industry knowledge and expertise. Partner with Promotive and experience their advantage to help you build a high-performing team that drives your shop's growth. Visit gopromotive.com today and let us help find and keep the best talent in the industry. Before we get into that, I just want to stop and say thank you to you and the rest of the dedicated listeners. Remember, if you want your question answered live on here or just have a question for me, shoot me an email at podcast@parmelis.com. Want to talk to us about accounting and tax services for your repair shop? Shoot us a text at 301-307-5413. So before we get into ERTC and the IRS's renewed enforcement of this, I have to stop and say a quick thank you to the folks out at Ratchet & Wrench. Obviously, I have been writing a monthly article for them. If you haven't checked that out, check it out at ratchetandwrench.com. But they also invite us out there to teach a class and just kind of go to their conference. So had an awesome time. Thank you to Chad and Chris and the rest of the team out there. And if you guys have not checked out the show before, always a great time. If you would like to come see me in person, talk about this same stuff, but much longer, come visit us at SEMA and Apex. So Thursday of SEMA and Apex, we will be teaching two classes, one of them on kind of advanced business planning and financials, and another one more focused on tax. But if you're in Las Vegas, stop by the class or at least shoot me a message and we can connect before or after. What the heck has been going on with employee retention tax credit? If you're saying, Hunt, what the heck is employee retention tax credit? Then this episode might not be for you, but you probably should share this with someone else because this is going to start to affect a large amount of people. So for those of you, we're not going to get into the details of this, but I would say that probably 10% of all businesses in America might have taken this credit. Maybe that's a large amount, but even 5% is huge. The sheer number of payments out there, the sheer volume of this stuff is something that we really have not seen before. With the government shutdown, change of administrations, COVID, a number of different things, even the overall application of this program, enforcement of it, and payment of this has really been something that we hadn't seen before. I hadn't talked about this a lot. I think the last time we talked about employee retention tax credit was in the spring. And I want to kind of give an update for those of you that have not received all of your money yet. They have been sending to clients pretty accurately and pretty regularly on the first couple weeks of the month. Now, I will tell you guys that, I'm recording this here in October. I haven't seen many in the past couple months. They kind of started doing this in January, February, and March, April, May, June, July. Yeah, we got a handful of clients still getting money. I have probably at least 20 clients that have received money this year, and a lot of them have received a good bit of it. In previous years, we had zero sort of communication from the IRS of, hey, we don't agree with this, we're going to audit it, we're not going to pay it, we're going to pay a reduced amount. In 2025, we are starting to see this stuff, and we'll talk about that a little bit later. If you are in the situation, if you are listening to all of this and you say, hey, Hunt, I got something really weird going on, right? Good or bad, I want to know about it. Shoot me a message at podcast@parmelis.com because really this is the way that I get updates and I share it with you guys. All of what I'm talking about this week in this episode is what is my current clients are dealing with, what my current clients are receiving or hearing. And then also I obviously have connections in the industry of accounting to other people that specialize in this and what they're seeing as well. The whole idea of this podcast is, like I said, to share information. This is more of a PSA episode of, hey, this is happening. I hope that it does not happen to any of you guys on here, but I'd be remiss if I didn't share this. So the same idea. If you have something and you would like to get it out and alert other shop owners, other business owners about it, I'd be happy to be the intermediary. Shoot me a message on this. As another PSA on there, I've had a couple of you guys ask me about this, but no, there is no way to call the IRS and see if they've processed your employee retention tax credit. The only way to know if the IRS has processed your employee retention tax credit is you get a letter telling you, hey, we processed it and we're about to send you a check. But for most people, you just get the check. That is how you know it's been processed. If you call the IRS right now, well, you're not going to get anyone because the IRS is currently shut down, which we'll come back to in a second because this is going to be a major impact here. If you talk to someone at the IRS somehow, right, I would be curious of how you were able to talk to someone, but they're going to tell you, just like I mentioned, hey, we have no way of tracing this. We have no way of seeing if we have it, if it's been processed or not, if it's not showing up in the computer system. And lastly on this, there is absolutely no way that any company, any lawyer, any financial company can speed up this refund. I've seen a ton of these solicitations. Hey, these guys are going to speed it up and they're going to take 20 cents on the dollar to get it. No, what they are doing is essentially a payday advance loan. They are not guaranteeing that you're going to get the ERTC money, but they will attach a high interest loan to that. You want to know the bad news on this is if you don't end up getting the employee retention tax credit, you still have this high interest loan. If you do end up getting employee retention tax credit, you might not end up with a whole lot after you pay all these fees. If you have not got your employee retention tax credit right now, what should you be doing? Nothing, right? Take it out of your mind. I truly, if I'm a business owner right now and I have employee retention tax credit out there, just like I've been advising my clients on this, pretend you never got it, right? If it ends up coming through, if you end up getting a check in the mail, it's going to be a very good day for you, I'm sure, but I would not bank on this. Could you get it later this year? Maybe. Could you get it in the upcoming years? Maybe, but I really don't think so. And we'll talk about that in a second here. I will tell you that all of this stuff I've been saying is all accurate information, right, from the IRS's press releases on this, but I also want to get to some rumors here. So when I ask around about this, I ask you guys, I ask other colleagues in the industry. I know people whose firms only did employee retention tax credit. I know firms that just did a ton of these. And so kind of asking around of what people are hearing. There was a bit of kind of confusion on this of the deadline, right? There was a moratorium when they stopped doing this in like August and it opened back up in December. And then it was like January, you could submit this stuff. But if you submit it after the deadline, you're not getting any money, right? I have had a couple people ask about this. I've had a couple larger companies mess up. But from what I'm hearing from the employee retention tax credit money people is if they filed after the deadline, they're writing it off on their books. And think about this, guys. If the people that did these credits that stand to gain 20 to 30% on these credits are saying we're probably never going to receive it, do you think that you're going to receive it? No, right? They're even saying, hey, take this off our books. We are not even going to look at it because we think if you filed in March, there is no way the IRS will process this. I would agree 100%. I will argue, and we'll talk about this in a second, a lot of people that were filed timely are never going to get processed either, but we'll see. Specifically, there's one quarter on here that seems to be giving people the most grief, and it seems to be what the IRS is the most concerned about. And if you are waiting for third quarter of 2021, you are probably not going to get it. We will talk more about this later, but the third quarter of 2021, if you think back to that time period, was where, for the most part, businesses and the general public was opening back up. The IRS is really looking at that quarter very strongly because there is requirements on how you qualify for the ERTC. And what they realize is that that's probably the quarter where the least amount of people qualified for this, but still had a massive amount of people claim this credit. What is that going to mean for you? If you've already received that money, you're probably okay. If you have not, then you might not be getting it. But for even some of those that have received it, like a couple of my clients have found out recently, the IRS might want some more information from you. Lastly, before we kind of get into, are you going to get audited on this, is what does the IRS say? We talked about this in the past. The IRS is still operating on their 2023 budget, meaning that no one at the IRS has got a raise. If we've seen the stuff in the news, the IRS has been obliterated with budget cuts. Currently, the government is shut down because they cannot agree on a budget. So we have IRS agents that aren't working. We have people that are getting filed. We have people that are getting furloughed on this. But the IRS came out in May and says that they plan to have all of this done by the end of 2025. There is absolutely 0% chance for them to finish all of this by 2025. I don't know the specific numbers on there, but it's taken them 3 to 4 years to process what people believe is probably 25 to 30% of these credits. How are they ever going to go through the remaining 75% in essentially 2 months here? Especially thinking right now that October's been a waste. No one has been working on this stuff in October, and I would argue even before that, people started slowing down. What I personally think on here is that this is going to be tied to their budget. At some point, the IRS is going to have to get a new budget on this, right? It's been delayed 2 years. The IRS, employee union, or whatever you call the IRS agents, they are very, very adamant. Like, this is their biggest sticking point here, arguably, is they don't want to do these ERTC returns anymore. I don't blame them. This is a nightmare. This is a nightmare program that the IRS created. They created a program where there's no way to process these effectively. All of these were sent in paper. All of these need a physical human being to either process these or feed them through something that's going to scan them to ultimately get processed. With the shutdowns, and we've had this a couple times, and the lack of employees there, even on a good day, right? Even 2018 IRS couldn't handle this. 2025 IRS will not handle this, cannot handle this, and I really think that we are probably going to see the end of ERTC. So if you have not been paid right now, do I think that you're going to get paid by the end of the year? I do not. I think that this government shutdown is going to have much more lasting effects. It's specifically inside of the IRS. Even so, they have some major issues beyond this. But at some point, they're going to have to stop the bleeding. They've created a program. They created something that was wildly, wildly abused. Unfortunately, there's legitimate claims mixed up in there. But I think if we look at the overall budgetary concerns of the country, the overall budgetary concerns of what they're trying to do in Congress, this is going to be a big sticking point. There's a legal side of this that is probably the only reason that this program is still alive. Is the way that they created this was they kind of just went along with the tax laws. So it wasn't a special program. It wasn't something temporary. And in order for them to change this, they would actually have to go back and change the tax laws. They can't agree what the budget is or what the salaries are for their own IRS agents. How do we ever believe that they're going to come together and try to get this passed? There is also a massive amount of public and private pressure on the IRS, kind of in a couple different ways. There's obviously a massive amount of public pressure from the IRS to get paid on this stuff, but they don't generally care what we yell about. There is a huge pressure from larger financial institutions that stand to gain tens of millions of dollars. Think about this, guys. If 60% of these claims have not been filed, then that means 60% of these claims have not had any commission paid on them. If you're a credit farm, if you're one of these FinCENs that does a ton of the ERTCs, they're spending massive amounts of money lobbying to try to continue processing these. I hope I'm wrong. I hope that everyone that files a claim gets their money on this, but realistically, look how long it's been, guys. It's every day that goes by, less and less chance of that remaining money coming in. But I want to be optimistic, right? I always think that there's a brighter side to this. Well, great, so do I, right? And I would look at this and say, hey, I think that there's good hopes for me getting money in the future, and maybe I put some sort of, goal for myself on it. Hey, if I can get this, I can do this. It would not be something that I'm factoring in for inventory purchases. It would not be something I'm factoring in for day-to-day cash flows, because I just don't know when I'm going to get it, right? Cautiously optimistic here, guys. Every month, auto repair shops can lose over $20,000 in uncredited parts, cores, and lost profits. WickedFile's AI-powered software is a game changer. It helped one shop owner recover over $10,000 in missed credits, and others have recovered tens of thousands more. WickedFile puts cash back into your business and hours back into your day. Stop leaving money on the table. Visit wickedfile.com to learn more and get started today. So now that I got your attention, and probably a little bit of your fear too, the big question comes is, am I going to get audited for this? And really what I see is there's two different categories and probably different groups that put you in. Just like anything out there is if your tax return shows $80,000 of income on there, you're statistically not going to get audited. If your tax returns shows $800,000 of net income, you might get audited, and you're probably 100 times more likely to get audited than your lower income counterpart. These credits are the exact same way, guys. If you got $40,000 in ERTC, you are probably not going to get audited. There's one thing here that I need to mention, because how much you got is a concern, but also how you filed this stuff. If you have received your ERTC, right, and you're saying, hey, hon, I've only had $50,000, $75,000, and you went through a regular company to do this, you did it yourself, whatever it is, I think that there is almost zero risk of the IRS coming back to get you. Meaning you got your money already. I'm going to put this up to 200 grand. If you got your money less than 200 grand, you didn't use one of these massive regional players to do this, I do not think that you are going to get audited. Why? Because why would the IRS come and look at just yours? It would have to be a random audit. They would have to select you. And if they're coming out to you and you got $150,000, they're going to have to go and they're going to have to argue X, Y, and Z, and they stand to gain $150,000 if they throw your credit out. Let's say that you did this through a PEO company, right? You lease your employees. This company reports payroll for maybe 3,000 different companies. Or maybe you went with one of those ones you heard on Fox News, one of these larger regional players. These are the ones that we are starting to be a little bit more leery about, because my only two audits have come from these groups. And we have to think about why, right? Why is the IRS coming after these larger groups? If you filed this yourself and you got $2-3 million on this, I think that there's a chance that the IRS comes out and talks to you. I think that there is a side of me that is a little bit annoyed if we sent out that much money and they didn't at least ask for backup documentation. Remember, when you guys filed this, whether you know it or not, the people that got $2 million filed the same exact return as someone that got 20 grand. And they also had to give zero backup documentation. It was virtually the honor system on here. Why are they going after the PEO groups and none of my high income clients that got a large amount? I have clients that I think the largest that we got was $2.5 million. Not we got, my client got it. Why is the IRS deciding to go after certain groups or certain filers and not others? So it kind of goes back to the same idea on why those of you that got lesser amounts are probably safe here, is that it's just not good return on investment for the IRS. If they come out and they audit my shop's ERTC, they stand to gain back one shop's ERTC. Like I mentioned though, if you're a part of a PEO group, that same quarterly 941 tax could include tens of millions of dollars in ERTC credits, because it could include thousands of business that they filed this for. What is the IRS going to do if they come and they are able to, throw out 50, 60, 600 different ERTC claims, right? That same visit, that same audit team stands to gain way, way, way more money than going and chasing the individuals on this. Bigger reason of why I'm also concerned if you filed with one of these larger groups or a PEO group is it appears that the whistleblowers have been kind of blowing the lid on some of these programs. A lot of these guys were very, very aggressive. A lot of these guys did not do anything to qualify. If you had a heartbeat and an EIN number, you were getting qualified. And if you remember, about a year ago, the IRS came out with an amnesty program that said, hey, if you got ERTC money and you don't think that you should have, you can send us back 80% of it. Just tell us what happened there, and we are going to give you amnesty. I'm not sure who would have done that. I think I advise I probably wouldn't do that if it was me, but obviously people did. And from the reports that we've been hearing is the IRS was listening to who these people were claiming they did it to. Not that this is all bad actors out there, but if they had 100 different people come back and say, hey, this PEO group called me up, they solicited me to do this, it was kind of a high pressure sale. From what you guys have told me, I don't think that I qualify and I would like to give this money back. If the IRS receives something that they're saying, hey, I just got our 50th person that complained about this group, don't you think that that is going to direct their audits, or at least their initial audits? And that is exactly what we are seeing now. That kind of covers the people that have received money, right? So if you receive money, you didn't follow through one of these large groups, you didn't get that much money, your money is probably yours, right? I just don't see them coming out on a case-by-case basis unless you kind of get, grouped into one of these larger groups. Now, if you haven't received your credit yet, we haven't seen a ton of these, but we have had a couple people that have either got their ERTC credits reduced or declined altogether. You can go back and challenge this stuff. The laws are very gray. That's kind of the whole idea that you guys were arguing here. Low numbers on this, but also I have not had a single client ever successfully go back. The most common thing that I see for whatever reason is you claim $60,000 because you said that you had 8 employees, and the IRS comes back and says you didn't have 8 employees, you had 3 employees. I had at least 3 situations where it's wrong. We completely disagree with it. Like, these clients have had 8 employees for the last 20 years, but we sent something back to the IRS of like, hey, I think you got your math wrong on here. We deserved a full credit. And as of right now, we've heard nothing back. If they can barely process these things up front, why do we ever think that they're going to respond to correspondence about it? Now, there's laws about this. There's legal responsibilities that the IRS has to answer these claims on, but who do you report them to, right? And it's kind of the IRS and our government in a nutshell nowadays. Are you going to get audited? Are you not going to get audited? Probably depends on who you filed this through, how much you got. And still, at the overall end of the day on this, you have strength in numbers. There is a sheer volume of returns out there that you're probably not going to get audited. But what happens if you do? The last section about this, and is probably the whole reason why I'm doing this episode, because I actually have something to share with you guys. I currently have 2 clients that are being audited for them, and I'm going to share this with you. Both of them use the same PEO company, BBSI. Both of them getting audited for the same quarter, which is quarter 3 of 2021. If you are a BBSI PEO client on here and you have not received an audit and you filed at ERTC, I'd probably call them up. It's probably coming. It seems that they're auditing every single person under BBSI. Why BBSI was chosen? I think it kind of goes back to what we were talking about before. From the firsthand experience of some of my clients, I got to be careful what I say here. I think that they were a bit aggressive. I think that they were a bit high pressure on this, and they're obviously a very big company, so I'm sure that the scale here was massive, massive, massive. The issue, and what we can learn from everyone, is no one knows what an ERTC audit looks like. No one knows what they're going to ask or what you have to justify until now. So I actually have the official questionnaire that comes from the IRS specifically related to employee retention tax credits. We're going to go down through this in a second, but I also want to let you guys know I have saved this in the show notes. If you want to download a copy, if you want to look at this, I think I'm allowed to share this, right? The IRS sends this out. There's nothing sensitive on here. But if you want to prepare yourself, this is what they're going to ask you guys, and we're going to go down through it. If the IRS comes to you and they want to see, hey, are you supposed to get this employee retention tax credit form? What are they going to ask you? So they go down through and it's fairly straightforward. They'll tell you name, address, EIN, ERC quarters. I think they actually sent all of that stuff to us. So like I said, this is for third quarter 2021. This is the quarter that they're concerned about because like I said, a lot of people no longer were under governmental orders at that point. And for you guys were essential service, so kind of tricky for the entire part. So the first question on here, are any governmental order to suspend the employer's business operations? So this one is a bit tricky, right? And this is where, this gets into the gray area. There has been no order to shut down your guys' business for the most part, right? You guys were deemed essential service. The argument here is that while the government orders didn't necessarily shut down your shop, they definitely drastically impacted this. Right, let's be real. People were not going out. I'm sure that the part shortages were hitting you guys. You probably had employee issues on this. You name it. It was a much, much harder time to do business. The issue here is it goes into the second question, right? Which is any records that the employer relied upon to prove that a nominal portion of his operations were suspended or whether a governmental order had a nominal effect on its business, right? So this is pretty cool here. So it's like, all right, what records were you actually using? What documentation, what numbers, what trends were you looking at here? Essentially saying, hey, that's great that all of your customers were using masks. That's great that you guys had to put up plexiglass, right? That's great that you guys had employees that were sick with COVID or whatever, but show me the hard documentation that you were able to prove that we were nominally affected by this. What does that look like? Probably depends on your business, right? If you're arguing that, hey, no one was driving, so I sold much less tires, much less brakes, you better have the reports to back it up. The big question comes on to this third one. Any records the employer used to determine to experience a significant decline in gross receipts. This is the big one here, guys. If you can prove that your receipts were 25% down from the same quarter in 2019 to quarter 2021, even the IRS is going to come out here and say, hey, you are qualified to do this. The issue here is for most auto repair shops, one of my clients, not the other one, they were not down. right? And you were probably 20, 30% up from the previous years. I've had people go in and looking at this and saying, yeah, sure, when you had COVID, there was total shifts in what you guys could get. There was total shifts in what your customers were buying. But the IRS is going to come back and say, hey, it's very hard for us to say that these governmental orders had a nominal impact on your business when your top line sales were up by 30% and so was your bottom line net income. And this is where it starts to get tricky. Any records of which employees receive qualified wages in that amount? This one should be very simple, right? You guys ran payroll. No one's fraudulently doing payroll here, so here's the payroll report. In the case of a large employer, we're going to skip that one because none of you guys probably have more than 100 employees, and if you do, you need to hire a tax attorney. Do not try to represent yourself. Documentation on the employer determine amount of qualified health plan expenses. Don't worry about that. Documentation of whether the employee is a member of an aggregated group. We don't care about that stuff. Copies of a 7200. You don't know what that is, and you don't care to know what that is, and it doesn't even matter. And then the last one on here is a big one, right? You're like, well, Hunt, why'd you get the first three were good? Give us some garbage. This last one is probably the one that surprised me the most. Records of information provided to third-party payer regarding the employer's entitlement to the credit claimed on the federal employment tax return, including whether the employee's industry is considered essential business or not. This is the part that is not sitting well with my clients with BBSI because they were never asked to provide this. For the most part, my clients were solicited and a lot of times repeatedly solicited for the same service. They know my clients were in auto repair. They knew how much they were affected. They know how many employees that they have. So why would we ever have to provide a documentation to a third party on something that we were never asked? And this, in a nutshell, is why we have such a screwed up scenario right now with this program. Is if my client loses this and he stands to give back $200,000, is that really my client's responsibility or is it the PEO company's responsibility? It's going to be tricky, and I hope that it doesn't get that way. But if I'm a shop owner and I go back to the IRS and say, hey, I hired someone, I hired this group and they qualified me. I did my professional responsibility to, ask the proper questions. But at the end of the day, I trusted a professional when they said that I qualify for this credit and I took this. I cannot see the IRS having much success going after my businesses 4 years later to try and collect this. Really for two different reasons. The first of which is most of them just don't have this, right? Remember what the spirit of this was. Hey, to keep people employed, to keep people there when they didn't have work to do. And a lot of my clients that got ERTC in turn just did that. They didn't let go of a single employee on this. They used this to reinvest in their business and make sure they kept their people employed. If you went back and you said, all right, well, we never would have got this, then they probably would have never spent a lot of that money. Probably would have been people that are losing their jobs. Does the IRS ever do what's fair and what's right? No. And I think that we are going to start to see what the overall impacts of this is. We have to be prepared. I hope that this doesn't happen to you guys. I hope that this doesn't happen to anyone that you know. But the realistic thing is their government is broke and the IRS is broke, and we are going to start to see more of these things. All right. The IRS paid out more money than they've ever paid in the past, and they're not happy about it. And I think in the coming years, we're going to start to see more and more of these. The ERTC program will go down in history as one of the most misguided and abused credits in U.S. history. If you want to look at the sheer dollar amounts on there, the amount of abuse is at a level that we have never seen before. For the most part, the business owners found to be in non-compliance have been directed, like I said, by these credit firms and by these vendors who've already pre-qualified them in order to make exorbitant commissions. Unfortunately, though, as we started to see once questioned, these same companies seem to disappear just in time when it's time to justify these credits. Statistically speaking, you most likely will not get audited for ERTC. But just like a couple of my clients, a handful will, and hopefully this helps at least one person keep your money. As always, please share with friends, fellow shop owners, fellow business owners, right? This episode goes beyond the automotive industry. If you have any questions, comments, or ideas for future episodes, shoot me an email at podcast@parmelis.com. Just want to say thanks again for listening on the Aftermarket Radio Network. You can find all shows on the aftermarketradionetwork.com and on your favorite podcast listening apps. Thanks again for joining me on Business by the Numbers. Stay safe out there, and I'll talk to you all next week.